Hello and welcome to this week's episode of the SoundMoney Sound Principles podcast. My name is Josh Anderson here with Zach Davis. How are you today, Zach?
I'm good. Hey, everyone. Happy to be on today.
Man, what a great day. You know, today's a pretty special day, Zach. We have a really special guest. We've had a lot of questions, a lot of people sending us information and asking questions around today's topic. This is a topic that every single business owner and individual has to deal with, but in particular, small businesses. You're going to want to have a notepad and a pencil today. If you're not in the car, you're going to want to really take some notes on ways that you can take advantage of today's topic. And we're super excited, Zach, because we have with us a longtime friend, CPA, Mr. Austin Wright. How are you today, Austin?
I'm good. Glad to be here. Thanks for inviting me.
We appreciate the time today. We know that it's tax season is upon us, so we are so appreciative of the time you're spending today because we know you don't have any extra minutes this time of year.
It's a little busy.
It's a little busy.
Anything for you guys?
Oh, good. Well, we appreciate that. We've done business with Austin and his accounting firm for 25 years. Kind of crazy. And with Austin now for more than 15. And so we appreciate the time today. And what our listeners, Austin, today we have a lot of listeners who are involved in the home-based business space. These are individuals who are involved either in selling products online or they're involved in home-based business models, mostly around gold and silver. We want to just kind of talk generically and generally today about some advantages and things that people who have home-based businesses can do to win and to succeed. And just kind of dive in. And so, first of all, why don't you tell us a little bit about yourself and how you got involved in accounting and how you got involved in this space of representing so many businesses in our community?
Yeah, I started probably 15, 16 years ago. My uncle was a CPA who you guys worked with previously. It's his accounting firm that I took over. He's the one that talked me into become a tax accountant, and really I was sold on not working in the summertime. Since I don't do that anymore, I have to work year round, unfortunately. So, really, I've always liked business, and the more I got into tax, I really like to figure out how to reduce people's liability and then structure, their businesses to have the best potential to succeed and then have more money taking home than versus giving it to the government. Yeah.
Would it be a fair question or statement if we were to say that, well, I should put it this way. Do you believe that almost everyone should have some sort of a small business?
Yeah, without a small business, you're kind of limited on the deductions that you can take and the different tax strategies that you would have at your fingertips. With the W-2, you're really, with the current tax code, you don't get any write-offs besides your home interest and donations for the most part. With a home-based business, depending on what you're doing, there are a lot of opportunities to take advantage of things that you're already purchasing that you could use or do use in a home-based business that you wouldn't normally get a write-off if you're a W-2.
Yeah, we watch so many folks that just don't know that they can take advantage of some of those things out there in the world and some of the advantages. Maybe Zach, what are some advantages or what are some things that you've seen? And then go ahead and feel free to ask Austin some questions around home-based businesses and why we think it's of paramount importance that people are involved in them.
Yeah, well, so I think one of the first things that maybe we ought to cover is what are some of the very first things some of the home-based business should look at for adjusting how they're doing taxes, because most people who are not self-employed and most people who are working a 9-to-5, they go to H&R Block or they go someplace else and they do their taxes and they have no idea what tax laws are available to them to actually be able to use. So maybe just a high level of a couple things that they should be looking at to reduce their taxes.
Yeah, usually the first thing that I recommend doing when they're going to start a home-based business is setting up an LLC. It gives you some tax strategizing for different entities that you can request the IRS treat the LLC as, such as a partnership or an S Corp. If you don't do anything, it's a disregarded entity, which just goes on a Schedule C, which still is helpful. But when you're getting it set up, normally you're going to look at stuff that you're generally just using for the business that's deductible, but then normally people have their cell phone that you're using on a daily basis for the business, which now is deductible, your home internet, and then you'll have home office deductions, which doesn't necessarily create a huge deduction, but it's stuff that you're already spending money on that now you get to take advantage of to help offset some of your tax liability, which includes your utilities, property taxes, insurance, home maintenance repairs, like your yard maintenance, and then anything that's specific to like setting up your home office, whether you're painting, getting a table and chairs, those are all 100% deductible outside of the home office because they're directly related to your home-based business. And then on top of that, a lot of times you're going out to lunch or dinner with your spouse or significant other that, normally wouldn't be a deductible event, but more than likely you're going to end up talking about your home-based business. Now that creates it as a deductible event for your business. And then going on trips, a lot of times, normally if you go, say, to Vegas for just a family function, but if you kind of time it where you're going to like a trade show or something that is in regard to your business that you can go visit, now the airfare and the hotel stays are now deductible, whereas if you're W-2, they're non-deductible. So there's a lot of things that I look at to try to maximize that you're already going to be spending money on that you can take advantage of. And then there's other things that you'd look at to try to increase your deductions that you've wanted to spend money on but just haven't because there really isn't a tax advantage to do it. But now, since you have a home-based business, now there are significant advantages to take those big purchases.
Okay, perfect. So let me ask you this: so set up an LLC, some entity, right? Set up a business,
Yep.
and then, like I say, most people are not using a tax professional; they're using some other software, like an H&R Block or something like that. So, what would you suggest if someone is going to start doing this? Can they do it on their own through one of these software, or do you suggest getting a tax professional, or what's your advice?
I would steer clear of H&R Block, TurboTax, Liberty Tax. Not that they have their expertise or sides on that, but you're really going to get advantage of working with a CPA, especially one that is familiar with small businesses. And most CPA firms, they'll have somebody that's works closely with them, but usually with H&R Block, TurboTax, they're not familiar with home-based businesses or small businesses in particular, that they're not going to figure out ways to maximize those deductions that you normally would get at a CPA firm. They're going to overlook them or just not even know to ask those questions. So if you are looking at setting up a home-based business or a side business of some sort, it would be worth your money to go find an accounting firm that you feel comfortable with and want to work with, because it's a working relationship. So it's kind of like a doctor. You want to feel comfortable with them. If you go meet with them and you don't feel comfortable, find somebody else. You'll be pleasantly surprised, though, the cost, versus going to H&R Block versus going to accounting firm. They're going to be pretty similar, but you get a lot more bang for your buck by going to an accounting firm. And they'll be able to walk you through a lot of those strategies.
Yeah, well, my experience has been there's lots of times that as an entrepreneur you go, can I do this or can I not do this, right? And I'm not a tax expert, and I can't just go to H&R Block and be like, hey, can I do this? And so there's lots of times where we're bugging the crap out of Austin and going, hey, can we do this? And he's like,
yeah,
I've never done that before. It's an interesting idea. Let me go research it before and see if you can do that or not do that. So my experience has been personally, when I first started out, it was kind of like, do I really need to pay a tax professional? It seems like a lot of money. But my experience has been that the money spent on a tax professional is well worth the money spent. Number one, it's deductible, right? It is a deductible expense.
Yeah.
And usually they save you a whole lot more than what you end up paying your tax professional. So I think it's worth it.
Yeah. I think just having the peace of mind that instead of you putting in the numbers and trying to figure out how this is applicable to the tax code or if you can deduct it, somebody else is responsible for that, but that's all they do. So they're gonna make sure that it's deducted correctly, or if it's a red flag, like, hey, like we might not want to do this because it could trigger an audit, and we try to avoid that or shift it around into different boxes to make sure it doesn't create some situation of that.
One of the things that I listen to this, one of the things that I love is that the entrepreneurial spirit is alive and well in America, even in the tax code. meaning the tax, it's hard to believe that, but inside the tax code, right? The reason we have these deductions and the reason why it's a benefit to have a small home-based business or a side hustle is to build and create jobs and opportunity in the community. And I love that it's set up in such a way that even a W-2 employee who's out there, busting their tail for somebody every day can have something they do on the side or a home-based business where they can take advantage of these things and really oftentimes, Austin, offset their actual tax liability within their W-2 job, right? It's to do that. How does that work?
Ultimately, that's, it's every accountant's goal to try to make sure that business has a loss. It's not always works that way. I mean, you want to be profitable, but we try to as much as possible reduce that income. If we get it to go to negative, say you have a $100,000 W-2, and then your side business with the amount of expenses you have coming in, end up with a $10,000 loss. That's going to reduce your taxable income by $10,000. And you're in the 12% tax bracket, and say you're paying 5% state, you're going to save you roughly $1,500, $1,700, which is better going into your pocket than the government's, because you're going to spend it more wisely than they are. They're going to shift
Wait,
it somewhere else.
Whoa. Hang on, Austin.
Doge
has
taught us that they're responsible.
Yeah,
Doge has taught us that they're responsible.
Who doesn't want to spend $40 million on condoms in Afghanistan, right? Like, who doesn't want to do that? Like, those people are prolific over there, apparently.
Yeah, it's it's going money well spent, I think. I'm glad that they're doing it. I worry. Keeps me up at night.
I know, me too.
So let me ask you this, Austin, because you mentioned having a loss. Like this is so funny. So several years ago, when the Affordable Care Act or Obamacare came out, and you had to do this whole exchange thing, right? It was a nightmare. I remember the first time that I had to call to do the whole thing, because both Josh and I lost our insurance, right? We got kicked off.
We were on it for 20 years. We got kicked off when Obamacare happened.
Yeah.
And then the new premium on any plan that would actually pick us up in the private sector was $5,000 a month. So we had to look at the exchange, right? And be like, this is like dumb. So I remember the first year we did this, I call in because you have to verify the income and all. They ask all the questions, right? Yes. Yeah. And so the sheet we turned in said that I had a loss, right? They're looking at they're looking at my taxes, and they see this number that says negative this. And I remember the lady on the other end of the phone, because as a business owner, you can't, like, the estimates are different. They have to do a totally different system, right? When you do the K1s. So I remember her saying, "Sir, it is impossible to have a job and lose money." I'm like, "No, ma'am, I own a business. We lost money. So I don't know what your algorithms do. I don't know how that all works for you, but this is what my tax returns are." And she's like, "Sir, you're telling me that you paid your boss to go to work and you lost money?" I'm like, "Oh my gosh, this is insane." I'm talking to somebody on the other end of the phone that's going to determine whether my children have insurance or not, or I go bankrupt because of a travesty. And she doesn't understand this. So maybe real quick, because I get this question a lot, and I'm sure Josh has too over the years. Some people will say, "Well, I'm not making enough money in my small home-based business to justify taking deductions against. If I'm only making a couple $1,000s a year, it's not enough money." So maybe explain to people how it works against their W-2 income. Like, where do those reductions come off?
Well, so there's a couple things you have to consider when we are doing losses on businesses, because a lot of people get hung up under, like, well, I need to show a profit because I don't want to get in trouble. And the tax code has in there a provision that says you need to show 1 out of 5 years profit of the business or the intent to make profit. So that's where, we side on, like, you could have a 10-year loss on the business, but if we have the intent to make profit, then we're fine. And we
try. We're just really bad at it.
We suck sometimes at our job.
You're updating your advertising, looking at new revenue streams, reaching out for different, businesses trying to generate some income. But then, so that sides with, having that loss that, we can now use as a deduction. So when you have your home-based business and then your W-2 income, they're both considered earned income. And you can take your home-based business earned income, and if it's a loss, it's going to reduce that taxable amount because they're both earned income, even though you have a loss on your home-based business. And it's going to reduce your W-2 income. Say it's $10,000, it will reduce that W-2 income by $10,000. So when you go to do your tax calculation, you're now paying $10,000 less of taxable income in that calculation. And it fluctuates every year. Some years you might have a profit, and that's where like the LLC would kick into effect. So if you're pretty good about generating income every year and we don't have enough expenses to offset that, offset your income, then you might look at setting up a partnership or S corp with that LLC to try to mitigate the self-employment tax that's generated from having a home-based business. But that's usually down the road. A lot of times for the first few years you have enough of those expenses to offset it, or working with your CPA, they'll be able to guide you in what some of those expenses are that you already are currently paying. Like we talked about your phone, you're already paying for that, but it's now a deduction on the business. Your home internet, your home computer, your printer, a lot of the travel that you're already doing, your meetings that you're already going and having at lunchtime and spending the money on the food, you're already doing that, but now it's a deduction to try to offset that income that you have coming in from that home-based business.
Well, I think it's a really important point, because I hear a lot of people say, well, I'm not making any money in my home-based business, so I have no income to write these deductions off of, so why take my deductions? People need to understand the expenses on your business don't just come against income in that business. Like Austin said, if you have a $100,000 W-2 income, even if you made zero money in your home-based business, but you have expenses that are legitimate expenses to operate and run and try to build that business of $20,000, well, you no longer get taxed on $100,000 of your W-2 income anymore, right? You get taxed on $20,000 or $80,000 of your income over here. So it's not just against your earned income in your business, it's against your W-2 all income. So all earned income. So you should, even if you're not making money, track it and take the deductions against your W-2.
A lot of people are getting hung up on like, well, I didn't make money, so I can't deduct all these expenses. As long as they're in the process of trying to earned income through your side business of your home-based business, they are deductible expenses for your business. And if you don't use them now, they're lost. You don't get to go back and recoup them. I mean, you can go back 3 years and amend them, but that just potentially brings scrutiny to that tax return. Will it cause an audit? No, but it does potentially raise a red flag. Whereas if you just go ahead and deduct them in the year that you created those expenses associated with your home-based business, then you don't have to worry about that headache of it. But also just getting in the routine of keeping track of all those expenses, so when you start earning income, you have those expenses already. It's just a normal daily activity. Like, oh yeah, went to the store and got some supplies. I went and ate lunch with this person, and I'll write this off. We went on this trip. Went down to San Diego and went to this convention and met these people. Yeah, we went to Disneyland, but the whole trip itself is deductible besides your entertainment portion of that Disneyland trip. It allows you to take advantage of a lot of the things that you normally wouldn't get to do, but it's within the tax code that we can write these things off. They're not just magically appearing, like they're within the tax code that allows us to deduct them.
So also on that, one of the things that that I love about a home-based business, typically in order to have a home-based business, a lot of times a company will make you buy so much product a month to resell or to give away as promotional items, or to in order to share your business, you got to have samples or products, right, to talk about or in the sales process. Talk about that. Are those items that you have that, like a lot of companies in a home-based business model will make you buy so much product a month to share or to give away or to promote? How does that work?
Yeah, so anything that you have to purchase or a subscription that you have to pay for to conduct business for this home-based business, whether it's just to be a participant in that company, is all deductible now, which is nice because a lot of times it's stuff that you already want to buy. And now in order to do business for this home-based business, you have to buy it. So it allows us to write all that off, whether you're giving out as samples or having it there to show other, potential clients, like, hey, this is what you get. It is all a fully deductible item,
So
which is nice because you have to pay money for it, and you're getting, say you have to pay $100 for gold coin,
maybe
you're
like
gonna get,
that,
say
maybe like
20, yeah,
$100 for a silver coin that I'm showing
yeah,
on the screen,
yeah.
right? That's
You know,
deductible.
instead of, and then I look at it as like, yeah, you had to pay $100, but it's going to save you 25% on your the taxes. So really didn't cost you $100. It cost you $75. So I look at it, you're buying this stuff on a discount essentially.
That's awesome. And that's, Zach and I involved, right? We have ownership in a company that sells gold and silver in a home-based business model. And because of that, right, I just think that's the coolest thing in the world, that you can actually buy a collectible gold and silver coins or bullion coins that you have to have for your business. And that those are tax deductible events.
Yeah.
That's pretty awesome.
Yeah, I think it's like, it's stuff that you probably already want to buy because you're interested in it. But having this home-based business now, it allows you to buy it and have the capability of writing it off because it's part of being part of the home-based business. Whether you want to resell that or have it to show potential clients that you're trying to sell on these other things, it allows it, makes it more appealing, I think. But also, anything that we can write off is the best thing ever.
Well, it is the best thing ever. And in the world we live in, Zach and I in particular, right? We love business. We love that the government says, hey, if you are making money, we would like you to reinvest it in your business or in other startup businesses. And there's just you just got to know how to take advantage of those things. And it's really powerful when you give back to your community and try and build something that can benefit more people. So,
well,
awesome.
And I think with that too, Josh, it's important to remember that this isn't tax evasion, right? There's a difference between tax evasion and tax avoidance, right? When you lie,
big difference,
or you falsify documents or make stuff up that's not really there, that's tax evasion. This is tax avoidance, but the government has, legislature built the codes, the tax codes, right? And so what they're actually telling you is, we want to incentivize certain behavior because it grows the economy. So, when you hear on the news, that, oh, Elon Musk didn't pay tax, Trump didn't pay tax. Well, yes, it's because the government told them, here's all the tax code. We want you to use all these, they're not loopholes, they're laws. We want you to use all these laws, and we want you to operate in a certain way that grows the economy. So it's not illegal, right? It's an incentive for you to behave a certain way.
Yeah. There's the tax code's like, I don't know, 40,000 pages, and there's lots of things in it, but there's a decent amount that talks about home-based businesses and small businesses, but they really they push that they want you to buy and grow so that they end up generating more income out of other businesses so they can collect more tax dollars. So if you say you go spend $100,000 on equipment, they're hoping that $100,000 piece of equipment is going to generate $1 million of taxable income. So yeah, we'll let you write this $100,000 piece of equipment off, have the loss on the taxes, but in the future we're going to collect $1 million of revenue from that piece of equipment. That's their ultimate goal, is to collect money, but it allows us to use those tax strategies to try to avoid paying tax based on what they've created in the tax code.
So I don't want to put you much on the spot here, but there's a lot of talk right now about the Trump tax credits, and they're about to expire, right? They're about to expire. And, Trump, we're hopeful. We got a president who's pushing Congress to extend those or to make them permanent, is what they're trying to do. That takes like 60 senators to make that a reality. But can you walk us through what is this debate about, right? And what are some key features of the Trump tax credit that might be going away?
Yeah, so at the end of this year, they revert back to the previous tax code, which is prior to 2018. And it has a huge income shift of tax brackets. So right now we have the 10, 12, 22, 28% up to 37. And then the corporate rate jumps up pretty high. I can't remember what it was. It's like in the 30%. Right now it's 21% for corporate tax rates. And then our tax rates will jump from that 10, 12, it's going to go up to 10, 15, 28, and then the brackets that the income gets taxed in there jumps up significantly. So you'll see a huge change. More than likely, most people end up paying more tax. There's a change in the tax code for Section 179 deductions.
Big deal.
Right now, it's at yeah. So when you're buying equipment or cars, trailers, anything that you're using in a business, you can choose to use the bonus depreciation or Section 179, which is similar to bonus depreciation, but you can elect to say, hey, IRS, I bought this year, but I want to write it all off at the first year I bought it instead of over 5 or 7 or 15 years. Right now, that limit is upwards of $2 million. If they go back to the old tax code, it drops down to 500,000, which in a small home-based business, that seems like a lot, but when you're buying, $150,000, $200,000 trucks and trailers and you want to buy 10 of them, well, if you don't get to write them all off, are you going to really want to buy those extra ones? Probably not. So you'll just limit it every year. So it's going to, snub growth for a lot of the bigger businesses. But the biggest one for like most middle class people will feel is the higher tax brackets and the change in the tax that gets taxed. The itemized deduction is going to get cut in half. It'll go from the 26,000 down to like 12. They'll have to adjust it for inflation at some point. And then the only thing that I could see as a benefit in the itemized deductions that currently we'll get that we don't have right now is the miscellaneous business deductions on the Schedule A for itemized deductions, which includes legal fees, tax preparation fees. If you're an employee and you have to pay for your cell phone or travel, you no longer can deduct that. But now, if they revert back, you'll get it deducted. But even with all those deductions, most people end up seeing an increase in their tax if we revert back to the old tax code.
Well, there'll be a lot of debate about that between now and the end of 2025, and
yeah,
there'll be a lot of talk around.
A lot of talk too, like they want to not tax Social Security, which I think would be huge. Not tax tips, not tax overtime. I don't know if they'll get enough traction in the Congress and Senate to get any of those passed, but those could have huge implications.
Yeah, we hope so.
Yeah.
Our listeners knows our Zach and I's feelings around anything that stimulates the economy, right? Anything that keeps U.S. dollars circulating in the market, right? And these Section 179 deductions, right? These accelerated bonus deductions are massive for that, for keeping the economy turning.
Yeah, huge.
They really make it so that's how our vehicle market, our heavy equipment market has survived since 2018. And I think it's a big deal. Like every household will feel an impact in their personal tax bracket if it reverts back. So we'll see where it all goes. Hopefully our politicians are wise coming up this year. So
I think with Trump winning, my guess is he'll just extend it. I don't know if they'll make it permanent, but he has the capability of like, hey, let's just get this extended for another 4 or 5 years, which would be awesome. And then give him enough time to, make it permanent. If a Democrat would have won, my guess is they would have let it lapse for sure. They are big on getting more tax dollars. So,
well, and if he does get these no tax on tips, and all this kind of stuff, it always makes Austin really nervous when Congress changes any of these laws, because the first phone call he gets is, "Hey, is $500,000 in tips too much?" How do we count this as tips, Austin?
I like it. I like where your head's at. I wasn't thinking that's where you're going with that.
I actually don't sell hay for cash. I actually just take tips.
They tipped me.
Now I can put my cash in the bank because it's tips.
Turning on my tip feature when you guys come pay your bill.
Hey, whatever you got to do. Entrepreneurs are always going to find a way. They're going to find a way. So,
sorry, just real quick. The other thing that ends up happening when they do that is they like to sneak little things in. So even though they're going to potentially change those or revert, back to the old tax code, they do any law changes, they like to sneak things in that benefit certain people. So you'll see some smaller things that have a big impact on certain industries that, who knows what those will be, but that'll come true too. So.
Well, Zach and I, our listeners may or may not know, we're heavily involved in oil and gas, and we didn't get in the space because of tax advantages. But as soon as we were in the space, we realized rather quickly that there's certain, to your point, there's certain sectors in our market that have gotten some preferential treatment over the years to make their industry work or to reinvest that money. And we've seen that, and we've been the beneficiary of it. And, it can be remarkable. We're currently involved in a lot of, wouldn't say green, but I would say renewable energy businesses, and the tax advantages are substantial to stimulate that part of the economy.
Yeah, and I think, because you brought that up, Josh, I think one thing that's really important too is if you're working with a current tax professional, when we got in the oil and gas sector, all of our oil and gas friends call us the hayseeds from Idaho because we grow a lot of hay in Idaho, right? And we don't do oil. Oil is not Idaho is not an oil producing state. So Austin, I mean, you probably don't have very many other clients, if any, that were doing what we were doing with the mineral rights. And so
not specifically.
Yeah. And so your tax professional only has a certain amount of hours in the day, right? They can't pour through 40,000 pages and understand the entire tax code. So even if you have a tax professional, if you think that there's something there, go ask your tax accountant and ask him to do a little digging. Because we found, we didn't know.
Found lots for us.
The second year, all of a sudden, Austin's like, hey, did you guys know that you can get this tax deduction on here because depleting asset? We're like, had no idea. Let's do that, right? So ask the questions, right?
They're there to work for you. So, a lot of times they don't know exactly what you're thinking or doing. So if you have a question on how it might apply to you, or if you can do it, then reach out to them. And if they don't know the answer, they should be capable of researching it. If they don't want to research it, I suggest finding a new account.
Amen.
Yeah, they're there for you. And we've experienced that lots of times with Austin, where we've said, hey, this is something we're looking at, and he goes and digs into it and finds out here's how we can participate. And by the way, when the government wanted to put us in jail once, he was there for us to tell us where to go to find ways to win and make sure that we didn't go to jail. Right? That was positive.
Yeah.
So
that was fun.
That's probably a story for another day. But
that's an interesting story.
Yeah, hey, you don't want to make them. We learned you don't want to make the IRS agents mad. You don't want them to be mad at you. Don't poke the bear.
The ones that carry the guns are the ones that you try to avoid.
Yeah, don't do that. It's never good when your tax attorney has to tell you should call your wives and tell them to be prepared for the door to be smashed in the morning by the FBI. That's not a fun phone call to tell your wife, okay? But it didn't happen.
I think we were young, Josh.
This
was a
young.
while ago. Early 30s. I think I was
early 30s.
That was the first year I was with my uncle's firm. Was that year?
Are you serious?
Oh,
that was your first year. Oh,
yeah.
Hell.
Yeah. So I just have to tell you, we're sitting at this table in the state capitol here, and we're meeting with this tax attorney, and his first piece of advice was, I can only represent one of you. The other one should go get your own attorney because they're going to try to pit each of you against each other. Right? We're like, oh, this is great. And I asked him, like, so talk to me about this jail sentence. Like, what? So we already knew each infraction was like 20 years in prison. And there's like 50 of these infractions that we didn't know. Like, we learned a lot through this process. And I remember he gets this like slide deck out thing, like when you're in school and they do the math, it's got like the card inside the thing. I'm like, okay, so talk to me about, I know it's 20 years maximum for each infraction, but like, what are they really going to push for? He's like, well, pulls his deal out and he goes, well, how old are you? I tell him. He's like, okay, well, that usually knocks off about 5 years. Okay, good. Making progress. He's like, well, have you ever been indicted for any of this stuff before? I'm like, no. He slides his little deal up. He's like, well, that can take 5 to 10 years, 6 years off. I'm like, this is insane that he's got this little ruler. It's like, well, here's max 20. Ask me all these questions.
Here's your life.
We'll probably get this down to 5 years per infraction. I'm like, great. So now it's not 5 lifetimes, it's just one.
It's one lifetime. But the beautiful thing is, right, what we learned through that crazy situation, right, was Austin's uncle and Austin were there to help us and navigate it with us. And at the end of the day, we ended up, we didn't go to jail. And we ended up the IRS actually came back to us and apologized, and we were fine. Now, was it a fight? And was it wild? Was it crazy? Absolutely. But when you're doing what you're supposed to do, the good thing, it works out. It works out. You do your best. Yep. Well, Austin, in closing today, what if you were to give, common person, right? We have a lot of listeners who it's the first time into home-based business. It's their first time selling a product. It's their first time doing anything that's just not W-2 income. If you had to just give that person the simplest of simple advice to get to start, what would you tell them today?
I have a 3-step process actually that I tell people that just start businesses. The first one is set up an LLC. It really doesn't have anything to do with taxes for that purpose. It covers you personally. If something were to arise and you get sued, you're protecting your personal assets because it's now separating you out. Set up a separate bank account for that business. So if you do get audited, you don't have to give them your personal bank statements, and they're going to scrutinize every single deposit. Be like, hey, what's this $200 deposit? And I'm like, well, it's my birthday money my dad gave me. You have to go through and explain all that. If you have a separate bank account, they're going to just run through that. And then the third thing is, you want to find a CPA or tax professional that's going to help guide you through this process. You might shop around. Usually what I recommend is, you're going to look for referrals. So friends or family, reach out to them, say, hey, who do you use? Who do you like? And I would probably approach somebody that's either in, the entrepreneur world, owns a business. So, who they're working with is going to be familiar with that, because not every accounting firm specializes in, working with small businesses or home-based business stuff. They're all capable of it, but they don't necessarily, that's not what they normally do. And so you want to find somebody to help you walk through this. So if you do have those questions of like, hey, can I deduct this? You can pick up the phone and call them or email them. So you don't miss out on those deductions, whether you're trying to figure out if you can or can't. My philosophy is if you're not sure, keep track of it and write it down, and then they'll sort through it and write it off if they can.
That's awesome. Well, thanks for sharing that with us today. Zach, closing thoughts today, Zach?
I think every entrepreneur who really wants to, there's a saying, it's not how much money you make, it's how much money you keep, right? Because you can make a lot of money, but if you pay it all in taxes, then you don't get to use it. So I think everyone on this call who's interested in either starting a business or currently running a business, if you're not doing the things that Austin mentioned, sometimes it can feel overwhelming. Like, you're like, I don't know where to start, or I don't think I'm not making enough money over here to do it. Or even if you're a W-2 employee and you're listening to this, you should go find a home-based business that you like the products of or whatever to take advantage of these, because this is, like I say, this isn't illegal. These are tax laws that were put there for you to do certain behaviors, and they will let you not pay the taxes on these certain things. So just start, just go set up the business. If you don't know how to do it, like Austin said, contact a friend, family member that has an accountant, but take advantage of these things. Start tracking and looking at what your expenses are and thinking about, okay, what am I using in my business? Quick example. My wife, Austin can say he can't do this if he wants, but my wife never buys groceries. My wife never goes grocery shopping anymore, right? She always goes to the store to buy office supplies. So you have to start thinking differently as a business owner versus W-2 employee, right? If you really start thinking about it, you go, well, that trip to town, I actually was going to drop off this product to somebody or go meet with somebody for lunch. So you can write those miles off if it's business, right? And I dropped the kids off at their sports event on the way back home. But my intent was I went in for a business meeting, dropped the kids off on the way. That's tax deductible because you were doing a business activity. So you use it to your advantage.
Yeah.
Well, I just absolutely love today's conversation, right? I think there's so many people that needed the information. Listeners out there that need it. One of the things that my takeaways today was it's for everyone. Everyone can be involved. Everyone can take advantage of these awesome opportunities that the government has given us, right? And if you're not doing it today, take advantage of it. Austin just laid out the perfect 3 easy steps to get it done. And at the end of the day, I'm a firm believer that the world needs more leaders, teachers, and entrepreneurs. That's what it needs. It needs more people out there making a difference. It needs more people trying to grow something. And whether that's part-time or full-time, it doesn't matter to me, but the world needs more of it. And so for all of our listeners today, we're thankful for Austin. More importantly, not just
Thanks for
coming
having
on
me.
today, Austin, we are more important. Zach and I thank you for all that you do for us. We know we're pain in the butt. We know we're hard to deal with, and we just say thank you.
Yeah, you're welcome. I like you guys always give me a challenge on to figure out if we can or can't do something. So
Well, that's not going to change. That's not going to change. So we appreciate you. And for all the listeners, we can't wait to see you next week on the Sound Money, Sound Principles podcast. You guys have a great week. And thanks. See ya.
All right. See you guys.
Thanks for
See you,
having me.
Austin. Thank you.
yeah.